If you're like me and you missed out on NVIDIA's phenomenal rally this year, well, in this video I'll mention another stock that is also benefiting from the AI boom and the data centers powering it. As always, this is not financial advice and is for entertainment purposes only. Alright, so the stock in question is called Astera Labs, ticker symbol ALAB. I hold this stock and I have high hopes for it, being my AI/data center play. The company makes equipment for advanced data centers powering the AI revolution. Data centers are not all about GPUs and CPUs. You need connectivity between these components and they need to be high speed and maintain signal integrity over distances. As data transfer speeds continue to increase and hyperscalers like Amazon, Microsoft and Google build enormous data centers, there's a requirement for high performance equipment that ensures continuity of operations. This is where companies like Astera Labs come in. It specializes in network communications equipment for these hyperscale data centers, and one of its key products is the Aries 6 retimer for PCI Express 6. Now, if you don't know what on earth that is, don't worry, I didn't either. And to explain it to you, I'll hand you over to the Chief Product Officer of Astera Labs, who can explain it 1,000 times better than I can.
With the widespread adoption of AI for a variety of applications, the complexity of AI models is increasing at an astonishing pace. Some of the more complex and widely used large language models are doubling in size every 6 months. Training such large models drives the need to cluster tens or hundreds of GPUs together using a robust back-end AI fabric. The maximum number of GPUs which can fit within a rack is constrained by power and thermal management limitations. So clustering hundreds of GPUs necessitates a multi-rack architecture. At the same time, the data links between the GPUs within and across racks must be robust and easily managed, since a disruption in any of these links can cause the whole training process to fail. We address these application challenges by introducing Aries Smart Cable Modules. Aries SCMs are integrated into active electrical cable assemblies to create long, thin, and flexible cables that span up to 7 meters while driving up to 128 gigabytes per second of PCIe or CXL bandwidth.
So basically their products allow for high reliable data transfers between components. But what about the company's finances? Well, in the latest quarter, Astera Labs revenue grew a stunning 206% year over year to $113 million, driven by hyperscaler demand and AI adoption. In addition, the company looks like it is on the verge of GAAP profitability, losing only $7.5 million in the latest quarter. This was a big improvement upon prior quarters. However, there are some risks to this investment, and they include 1. High R&D expenses. As with a lot of high-tech companies, Astera spends a lot on R&D, and whilst that may impact short-term profitability, it may be worth it in the long run if the company emerges as a leader in its field. 2. Hyperscaler customers pose concentration risk. Because there's only a few hyperscalers like Microsoft, Amazon, and Google, if Astera loses work to any of these customers, it could have a huge impact on its bottom line. 3. Market and regulatory risks. Astera Labs doesn't manufacture its own equipment. It outsources it to factories overseas, like Taiwan. If there are supply chain or geopolitical tensions in East Asia, it could also impact the company's financials. And finally, the company has quite a rich valuation already, currently trading at a price to sales ratio of over 60 and a forward PE ratio of just under 100. But in a bull market, the market doesn't really pay as much attention to valuation as it would in other times, so who knows how expensive stocks like Astera Labs can get. With that said, let's take a look at the charts. This company IPO'd earlier in the year and it looks like it had a bit of a flush out not too long ago, after which the stock recovered strongly and has been going up since on high volume. This dip, followed by a high volume recovery, suggests to me that the sellers who wanted to sell are now largely gone and that institutions are accumulating the stock. Now, if we switch to the daily chart, it looks even more bullish, with the green volume bars on strong up days even more apparent. So from here on out, as long as it holds the key moving averages, I don't really see why I would want to sell. Also, this stock is part of my top 30 list for December. If you want access to that, it's in my private membership page. There's a link in the description below. Anyway, AI is by far the leading sector right now, and I'm riding the wave for as long as I can by being invested in stocks exposed to this sector. Like this video if you agree, and if you want similar videos like this one, please hit the subscribe button and hit the bell notification so that you get instantly notified whenever I post a new video. Thanks for watching and see you next time.